How would this impact the dynamics going forward?
Well, I think it's important to realize that the Africa Continental Free Trade Area is an ambitious statement of intent, but it's not really a very clear roadmap of how you could create a single trade area in Africa. It is very much the aspiration of everyone to further bring down the barriers and particularly let the flow of goods and people occur between the existing trade blocs. Already in West Africa, we have the CFA Franc Zone, you have ECOWAS, and then, of course, in Southern Africa, SADC, East Africa, the EAC. There are a number of existing trade blocs, and it's really about piecing these together that will create the CFTA. But where I think it's really positive to see the impact it will have is on the agricultural sector, particularly in West Africa. So many agricultural goods flow around informally and particularly across borders. And by creating a single market, they are going to legalize so many flows which are currently illegal. And that is a huge opportunity for many decent farmers to actually make a really good living and to exploit opportunities where they can sell legally over the border in areas where there's a shortage of a particular crop.
All right, but do you think this would significantly impact the dynamics with cocoa, specifically when you look at Nigeria, Ghana, and Cote d'Ivoire?
Well, I think I would hope it would address the need for a much better internal market in West Africa. A lot of the flows of cocoa are smuggled. If you think about the flows between Ghana and Cote d'Ivoire, usually in one direction, but it can vary from season to season depending on the price differentials. If you are in a single market, that will also actually help both Cote d'Ivoire and Ghana cooperate much better, which is what they wanted to do. Ultimately, all the cocoa in Africa sloshes around. It moves from country to country. And so if you have a single market, you can remove a lot of the incentives for certain unscrupulous traders to try and avoid taxes or avoid certain scrutiny in a particular market. If you're in a single market, it's about much more open flows. And so ultimately, I think that will benefit the consumer at the end, and also the farmer, who should have a bit more freedom how he can sell his cocoa without having to go through necessary middlemen to try and get the best price.
All right, but we're already seeing some level of cooperation between Ghana and Cote d'Ivoire. We saw that last month they signed a pact, to create some standards for their exports going out there. How do you think such collaborations will play out in the future?
Well, I think they're absolutely essential. If you bear in mind that Ghana and Cote d'Ivoire together probably produce up to 60% of the world's cocoa, and yet for decades, they've often been looking in opposite directions, despite the fact they border each other. You have cocoa plantations on both sides of the border, and there are flows back and forth where the border is not clearly marked. So it makes sense the two of them should try and cooperate together and collaborate. The difficulty is that as it currently stands, Ghanaian cocoa from Cocoa Pod has a premium over Ivorian cocoa. And you could argue that in the long term, the only winner will be Cote d'Ivoire for a more open market. But ultimately, because there is a lot of corruption when it comes to the flow of cocoa, illicit flows, and also the control of certain parts of the value chain by unscrupulous characters, I think increase in transparency and better coordination between the two countries definitely will benefit them.
All right then, but what would you say about the efforts by countries to get more from the other end of the cocoa beyond the raw materials? We see Ghana doing quite a lot in the area of value addition.
Absolutely, and I think what's really impressive is to see the grinding sector in West Africa is actually growing again. It struggled for a few years when prices were lower. We've seen in Cote d'Ivoire definitely about a 10% increase in grinding over the last year, and in Ghana it is increasing slowly as well. But I think we have to understand that as there is very little demand in Africa for cocoa products, ultimately any grinder in West Africa has to compete with a grinder in Singapore or Germany or the US, and that puts huge pressure on them. Ultimately, if they really want to get to the sweet end of the value chain, they need to develop products made of cocoa for African tastes and sell them to Africans, because that is where they will capture the profit.
All right, but I'm trying to imagine how the AfCFTA will, impact in all of this, especially around when you look at getting tariff and non-tariff barriers, sorted.
Well, yes, I think what will be really good is it will help actually introduce more of an efficiency in the cocoa zone. If you imagine sometimes in Ghana they're short of cocoa and they say, right, we're going to have to import some from Cote d'Ivoire. Well, Cote d'Ivoire is in the CFA Franc Zone. Ghana is part of the Anglophone Africa, West Africa Union. And so you've got different currencies, you've got different legal constraints, there are tariffs involved, etc. If it was all a very clear single market within the CFTA, you would be able to have the most efficient grinder sourcing the most best price cocoa from anywhere in the region. And that would definitely help not only efficiency, but it would actually start helping weaving together these different cocoa producing markets, which currently are strangely separated.
All right then, but let's look at competitiveness now, and how this will impact the countries going forward. We're seeing Nigeria trying to be aggressive here, trying to ramp up its production in cocoa, and then we're seeing Ghana and Cote d'Ivoire already blazing the trail. For countries who are also trying to play in this space, how will this impact competitiveness?
Well, I think the key thing here with competitiveness, as often is the case in agriculture, it's about yield. How much cocoa are you getting per hectare of farm? How is husbandry? How are you managing the crop, the inputs, etc.? So Ghana has certainly proved very effective at doing this for many years, though they still have a very aging tree stock. In Cote d'Ivoire, it's a bit more fragmented, the system. But what I would certainly urge any other relatively new emerging cocoa producers, for example, Nigeria, that's trying to get back up to the levels in the 70s, Cameroon, even micro producers like Sierra Leone or Liberia, is they should probably aim more for the speciality part of the market, producing a kind of cocoa. It might be organic, it might have a particular flavor or color that fits in with the value chain. Because if you want to compete on volume, you're going to really struggle to produce large amounts of cocoa with the same efficiency as a country like Cote d'Ivoire and Ghana.
All right, then. So let's look at some international dynamics and see how this impacts the cocoa in there. On one hand, we just saw the news around Brexit, the extension coming in till October the 31st. And that's just going to coincide with the next main crop for cocoa. How will events like Brexit and other international events impact the commodities, soft commodity space?
Well, I think the real problem with Brexit is that it really demonstrates how a flow of something like cocoa really is intertwined through the whole of the EU. You have a lot of the financing and insurance to do with cocoa, a lot of the logistics, which is actually handled by companies in the UK, though they aren't all necessarily British companies. You have a lot of grinding operations in the European mainland, but also in the UK, and you have flows back and forth of products and also finished confectionery as well. You have a lot of things that, if you like, are being produced in Europe and then shipped to Britain, and vice versa as well. So the complexity of this is enormous. And I think that definitely the logistics and the value chain flow could be severely disrupted by a bad Brexit. But when it comes to things like, for example, the London contract for cocoa, I don't think that will be affected. Regardless of whether Britain is in the EU or not, I would expect a lot of those benchmark prices that people rely on from London will continue.
All right, but would you say this gives the African producers the stronger edge to negotiate in the future of the cocoa industry?
Well, I think the important thing is for any of the countries or any of the producers of cocoa is to have a positive relationship with the off-taker. I think the important thing is for off-takers to actually know where the cocoa is coming from. And I think this is actually where countries can start differentiating themselves and saying, we have the best cocoa practices, we can fit with what your consumers are wanting at the other end. Because ultimately, once the value chain is put together, the farmer at the beginning does actually get benefit from it. There's visibility. As it currently stands, too often, cocoa just appears somewhere in the value chain and is taken on by the first trader. And that's when you start making the margins. The farmers who produced it, no one have any idea who they are. We need to bring them into the value chain. And I think this is the opportunity. Countries which really promote the best practices can reach out to a Britain which is outside the EU, and also maybe of the other EU countries, and say, let's really connect our cocoa and our farmers into your value chain. It's mutually beneficial.
All right, now let's look at prices, though. We've seen forecasts saying we're likely going to see some likely glut in the markets in there, but we're seeing prices are still rising. What's your outlook for prices for cocoa?
Well, indeed, it's strange. I mean, prices have had a very strong start to the year. Around 6 months ago, they started rising again, ending a long falling glut, and they're now at about £1,800 sterling to the tonne. That's at the top of the range they've been trading through for the last couple of years. And it's true, it would seem odd as Cote d'Ivoire's production is up at least 10% this year. And that, if it goes through to the end of the season, would be a world record for Cote d'Ivoire. We've also seen strong production in Ghana. I think what is really driving this is demand. It's really clear. We saw the last numbers of grinding that came from Europe and from North America was strong and growing. And we've seen very strong and sustained demand for confectionery in general and chocolate products. So that's what's driving it more than anything. We're also at the end of the main crop and about to start the mid-crop, and that's another reason why some of the deliveries have fallen on the markets. Maybe the prices have gone up. I think there's certainly potential for prices to soften over the next 3 months, particularly if it turns out the mid-crop is good in Cote d'Ivoire, because that means there's easily sufficient cocoa for the world market.
All right, then let's shift our focus to another soft commodity that I think is of also vital importance in the region. Let's look at cotton now, and I'd like to see, get to hear from you, especially how you think, the AfCFTA would also impact this crop.
Well, I think currently the cotton sector is relatively well integrated in Africa. In sub-Saharan Africa, anyway, it's focused on the CFA franc zone, French-speaking, led by countries like Mali, Burkina Faso, Cote d'Ivoire, and Benin. And there's already a good degree of integration between those countries: same currency, same language, same legal system, etc. I think what could help is with the flows of these commodities into other regions of Africa outside the CFA franc zone. Currently, the outlook is very positive for West Africa, and we've got high prices internationally, or relatively high prices, so they should benefit from that with increased crop and increased price on top of that.
All right, then still linking it to Brexit, though, do you think it's as intertwined as cocoa is in the region?
Cotton, that would be hard to say. I mean, the reality is probably the majority of cotton which is exported from West Africa goes to Asia. It might be Bangladesh, it might be China, to many of the hubs where there are textiles in operation. And there's relatively little value addition of cotton in Africa other than just the basic ginning of the cotton and separating the seed from the raw cotton.